All right, and welcome back for another episode of Carnivore Trades. Today is Wednesday, July 24th, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. We're so close to 4K subscribers here. Let's see if we can get there. Big sell-off today, so should be some views on this video, hopefully. So hopefully we can get some subscribers there. But anyways, let's get into it here today. What can we say here? Where to start? Big sell here. It's been a while since we've seen 3.5 on the Qs, and we're at 3.25 right now. Man, again, where do I start? So we'll probably close right at 54.50. That's kind of my thought here, unless we see longs capitulate into the close. But this is what happens when 0DT works the other way. So right in the morning, 5,500. You can't see it anymore because it's just only looking at a few strikes right now, but you can see that there's the delta up there. But as soon as we passed that this morning, they made a beeline for 54.50, and you can see we just went straight there. So take a look at the NQ daily candle, by the way. We actually just hit, and that's partly why we're bouncing, I think, but we just hit the 50% fib here on the NQ futures. So big retrace there, very fast. But you can see here on the SPX, 54.50 right there. So as soon as we blasted through 5,400, they just went right through. I said, I've been telling you guys 54.75 area could be a little bit of support. But I said in the trading room, don't buy that. Just don't even touch it. Just let them take this through, because they've been targeting that 54.50 all day long. And again, that's what happens when 0DT works the other way. Now, what's the catalyst here? Right now, I mean, this morning it came out. I should have known they were going to do this too. Something that was going to happen in the overnight. But if you guys don't know who this guy is, works for the Wall Street Journal. This is the guy the Fed trots out when they want to tell the market something without saying something. And Bill Dudley, former New York Fed president, saying basically he flipped. He did a 180. He's dovish now as far as rates. He wants the Fed to cut rates next week, not September, next week. And I think the market is, looking at the yield curves, that's probably going to happen. So we can look at the 2-year here and really just look at the curve here. The most uninverted since the 23rd of October of last year. Now, it's still not uninverted fully, but you got to think it's probably going to get there. Now, the 3-month 10-year is still distorted as all hell. So that's still over 100 basis points inverted, but 5s and 30s and 10s and 30s, they've been uninverted for a little bit, and they're starting to go the other way. I guess let's just talk the macro crap now. I think this is a huge policy mistake, and I think the long end is kind of telling us that by being up as much as it is. Usually when the yield curve unwinds, as far as I know, usually yields are down across the board. It's just the 2-year yield will be down way more. And short yields, short end yields will be down way more. The long end here, I think, is saying, like, what are you doing? But that's neither here nor there. We'll see if that ends up being true. But in any case, right now, all anybody cares about or should care about here is the charts right now. So we had the summer of narrative destruction, right? Everything has been destroyed. Every talking point has been destroyed. And I'm sure all the people who have been saying to buy TLT for the last 3 years are out there saying, I told you so, because we now have a yield curve uninverting, but even TLT is red, so that makes it even funnier. But in any case, what's going on here? Well, we are testing this trend line right now. We basically hit the 50 MA. In the SPX. I want to stress this here. If you're short, make sure you're taking profits here on the way down. I'm a little bummed. I missed, I was looking for 55.90 yesterday. We just didn't quite get there, but I gave you guys the level 55.85. It hit it to the penny basically, and pretty good dump there. I think right now, though, you want to trail your stops if you're short. You definitely cannot, if you're new, please do not go short right now. Do not short into the hole. That's what we call it, shorting into the hole. Because at any point you can get a massive V-shaped squeeze to the other side. That doesn't mean the market won't go lower. It doesn't mean the market can't go lower. Because I know the bears will start getting mad at me if I start, saying too much bull stuff here. But we know a big squeeze is coming, right? It's going to happen. Does it happen here at the 50 MA? Do we Pearson hit 5,400 first? There is a measured move I'm watching for tomorrow at about 54.15. So if we just take that, oh, I'm sorry, let me do that again. Right here. So if we take the high to the low, and then just copy it to here, you know, you're gonna see that's right around 5,400. I probably didn't do it right, but 5,400 to 54.15. It coincides with that trend line and the 50 MA. So, but again, we could slice it. Again, we're basically closing at the lows of the day right now. So we could get a gap down. I'm very interested to see where AAII comes in tomorrow. Last week, bulls hit almost 52. Anything above 50 is usually a good sign of a a crowded trade in the near term. I would imagine they're way lower now. So interested to see where this goes. And watching that 5,400 handle, I don't see us going much past that though. So especially if we get especially if we gap down tomorrow, I think the low gets put in, by PCE on Friday. That is not a macro low. That's just a near-term low. That's a tradable low where we could get 150, 200 point squeeze pretty easily. So that's really all I'm concerned with right now. I would not look to go to fade this market here. You're shorting into the hole. And you can always look for a lower high here. The first leg of the bear is always the softest. And we're basically going straight down, right? So a couple other things. I'm still really suspect of this whole move, right? So we've, on the Qs right here, believe it or not, this to here is the same that we've done from here to here, and we've done it in less time. Now the Qs have more volume. I told you that chips would not do well and technology would sell more, and that's been the case here. But looking at the spiders here, you guys will see what I mean here if I'm right about this, but I just don't see volume. Like there's not enough. This is not distribution. A lot of what I saw today was ODTE driven. Again, that doesn't take anything away from sellers. It doesn't make the money spend any less differently. So, when people criticized, bulls on the way up, it don't make the money spend any differently when you buy the dips and profit from it. But what I'm saying is that I think there's a tradable low here coming. I just don't see the volume behind this. And additionally, even though the bottom did fall out by the end of the day because everything kind of got dragged down, I'm not seeing the weakness here from the Russell. Why does that matter? Because the Russell is a bunch of small caps, right? If we're going to go into recession, that's the big fear right now. It's recession. It's not inflation. It's not anything. It's the recession, right? This should be down way more than anything. And it's actually up and was actually green for a good part of the day. So was the KRE. You might say, well, bonds were up. That's why it was up. Really, were bonds up? Because TLT is down almost 1%. So the 2-year, the short end, is up, but recession should trump that pretty much any day of the week here. So I'm just not seeing the full picture here. KRE being, a leader right now. XLV is green on the day, so there are sectors that are holding up. VNQ is holding up at one point. It is down now. It was green for a good part of the day. The Dow Transports actually had a V shape this morning, and then again, once the bottom fell out of everything, they kind of came back in. So again, it really looks a lot like rotation out of tech. That's probably the wrong word. I would say tech deleveraging. But it doesn't look like a pure risk off to me. That doesn't mean it can't go lower, but there's just a lot of little red flags here. The bears are doing what they need to at face value, like I said yesterday. You needed to defend that area. They did. But I would just, if we just had 100 million shares on like any one of these days, I would be way more, I would have been short yesterday. 100% would have been short. And I would be telling you not to buy dips. But here we are, and markets are, kind of inching lower right now. Let's see, they keep flirting around with 54.30, but in 54.50, so they'll dance between that. We got 15 minutes left. We'll see which one wins. It doesn't really matter by the end of the day. It's just a big down day, and we're not going to recover here by the end of the day. So I would expect probably a gap down tomorrow. As a bear, though, you don't want a gap down. You actually just want us to retrace. I would actually, for a bear, I would want to see a small gap up and nothing into tomorrow, nothing into PCE. Because if we gap down and try to flush tomorrow, I think that rubber band gets max stretched. That's my 2 cents. Anyways, QQQ here. Again, down 3 1/3. Big level here just below 460. You got the 100 MA right there. I don't really see us going much past that. But good sell here for the markets. We talked a lot about the Russell there. Again, still in a pretty bullish configuration, but you do have a possible lower high now. Could you make a lower low? Yeah. But you could also, you know, start to do this type of thing, right? There's nothing saying that can't happen above all the moving averages, so just assume that that can be the case until proven otherwise. Dow actually think is interesting here at the 20 MA. The Dow should hold up. It's going to be the strongest in a recession. A lot of blue chip stocks, and that 20 MA could get defended here. Whenever it starts to go down, 395 is kind of the next level there. SMH I think is very interesting here around that 100 MA, down in a straight line, no bounces. There is a level just below that at the 618. Again, these are just bounce levels, but I think they're tradable. So it's 237 and then like 230, 231. So, I mean, I think the next play right now, if you're in mostly cash, like I've kind of been, is just look for a higher low to trade. And then, you know, if you want to short, you wait for the lower high setup. Don't chase into the hole here. IGV down 3%. This was strong earlier, relatively speaking. It was strong yesterday relative to the market, but definitely bottom falling out here. So that needs to be respected. So we'll get rid of this lower trend line for now. Levels here right around 82. There should be a good deal of support there. And then you got the 200 MA just above that. But IGV taking a hit. Dow Transports we talked about a minute ago. We'll watch this trend line here tomorrow. Definitely want to see that hold, obviously. But if it gets hit tomorrow, gets hit. Next big level's around 15,150. Rates here, so obviously the 2-year yield down, and we're still holding on to that 4.4, 4.2, 4.4 to 4.42 area. But obviously in a downtrend now, and expecting the Fed to cut here. So I don't really have a great level here until probably about 4.2 for the 2-year. 5s holding up a little bit better, and then obviously 10s and 30s are green. So that long end is still anchoring inflation expectations even as the short end comes down. So something to keep an eye on there. XHB was actually pretty strong earlier, but came in by the end of the day again, but no changes. As long as we're still inside of this green here, this green breakup bar, it's still bullish inside bar. So even though it's down 2.5, it's a big move, 2.5, but it's still got this range to work inside of. And 110.17, as long as it's above that on a closing basis, believe it or not, it's still a bull inside bar. If it fails, it fails, then we're probably going lower pretty fast, but that is the level. VNQ, again, this was strong earlier, was actually considerably green, and now down 1.5. So again, once we had that second really leg down, that's when all these other things just started to really come down. It was holding up okay, but then boom, right down. But still plenty of room for higher lows here. Again, you got the 20 MA up here. You had a nice breakout recently. So there are sectors that are still holding up. It doesn't appear to be a mass exodus. XLF on the weaker side, but nothing really terrible. Down 50 cents. It's not the end of the world. KRE still very strong on the day. Down 1.5, but again, this is far from a bloodbath. And same thing with KBE. So banks are probably the best thing for bulls. Outside of healthcare, XLV up nicely. So 0.75% there for XLV, and U up. Again, kind of a recession play there. But bonds on the long end are not really up. So broker dealers here down. Still inside bar though. So broker dealers still okay at the moment. You know, and even if they go down, I mean, I don't see them. You know, they probably bounce around 630, 640. So. Here's the other thing that I find really funny. So we're going into recession, but crude's up 70 cents. So you know, figure that out. I'd love to hear the macro reasoning behind that, and that's why the macro, you know, we use it, but at the end of the day, you got to go with the charts here. Yeah, maybe oil is calling BS on the recession. Maybe it's up because it's in response to the long end yield being up. Right, that's certainly possible. Maybe it's talking to us in that regard. XLE is green, up 3 cents. Again, it's up because oil's up, but you know, holding up okay. in a down tape. XOP down 60 basis points, nothing terrible. OIH down 2.25, but still got some support here in the short term, but pretty good outside candle. Definitely looking more like a weekly lower high in the near term, but you do have a tightening range. I mean, if we just kind of, do something like this, kind of like a tightening range there setting up. And I think this is going much higher over the longer term. But definitely down today. CCJ down 2% as well. URNM still going lower again. Weekly failure. And the chart is failing. NM got to reclaim 22.92 by Friday. Otherwise, that's going to be a failure. And then we had nat gas here. Kind of quiet on the day. Down 5 cents. It's still holding the green bar. I have not touched it. I don't really have a trade on it at the moment. I'd still favor some type of maybe relief bounce here, but that's about it. Dollar index holding up all right, down 8 cents. Nothing terrible here, but we back tested a little test candle there. So dollar is actually hanging in there. And again, if fear is recession, you think the dollar would be down a lot more, but it actually ramped back by the end of the day pretty nicely. So again, I think the long bond is going to be a huge problem for this market, or for the Fed rather. Gold here, flat to lower, was up a lot earlier. And I don't think it was quite ready to break out. Silver down as well. Given that the downside bias to about 28. GDX was up a lot earlier as well, now down 0.5%, and SIL down 31 cents, but they're still holding up all right. Nothing really wrong there. Platinum green and holding on to that 200 moving average right now. Again, no trades with that one. Palladium trying really hard for a third higher low here, but nothing too inspiring just yet. And then copper here is still getting really attractive down here into that 200 MA. It's definitely caught my eye here at this level. So I have not pulled the trigger on that, but it's definitely getting really attractive. We did cut through the 50% fib, coming close to that $4 whole round number pretty soon as well. But into the 200, we'll see if that offers any sort of bounce here. And lastly, Bitcoin down as well, but Bitcoin really quiet, down just 38 basis points. I mean, I guess, this is why Bitcoin's so strange, because there's days where it does well when there's like crisis and people are like, oh, it's a risk off, and people are going into Bitcoin, like with the IT stuff last week. And then there's days where it's down big and people say, oh, see, it's a risk off, Bitcoin's down, but only down 0.5%, which is basically nothing for Bitcoin. We expected a pullback anyway with this trend line here, and it's hanging in there fine. Plenty of room for higher lows. ETH is down. Sell the news, I would assume, on the ETF. But this bull pattern is still pretty good. So as long as we're above 32.35, this is still potentially a bull pattern for another advance. But sell the news right now in that after the ETF. I see the market's down ticking right now as we get close to the end of the day. Oh yeah, so they're just going to flush 30. So you can see right there. Yep, that really kind of took over. So again, big, people complain about the gamma squeeze on the upside, but it can work just the other way, just as powerfully to the downside. So as soon as 55 broke, they just forced market makers down all day long. Now that will unwind tomorrow, it's ODTE, but here we are at these prices. So we're into that trend line touching the 50 MA tomorrow. Again, right now, to sum it up, I think bears, you don't want a scapping down tomorrow. For bulls, that's exactly what you want. Because we know a big V shape is coming at some point, but this sell can continue if we, do some backing and filling. But the more stretched we get, we are now 3 standard deviations stretched on the Qs from the 20 MA. So keep that in mind. Very much like we were up here, I said, guys, watch for a pullback. It's 3 standard deviations. And we got that. Then we got a little higher high, and then it ended up being a fake out. So unsustainable move here in the short term. But really good showing for bears. They showed up where they needed to, 55.85 yesterday. I would just prefer to see a lot more volume, and I would prefer to see these other sectors actually participating in the sell and have small caps not be strong on a relative basis. But that's neither here nor there right now. We'll just respect the charts for what they are. So anyways, guys, going to wrap up here. You guys take care. Come find me on CarnivoreTrades.com. I will see you guys all tomorrow.